We are moving forward, and we will be having, in my opinion, one of the most impressive plethora of speakers in this panel. You'll see it in a second. And the topic of discussions will be dedicated to digital payments with specific focus on some products that are changing the world, including CBDCs, stablecoins, and different infrastructure ecosystem facets for the cross-border payments. The moderator of the discussion is the one who is managing and building the Digital Tenge project here at the National Bank. And the speakers are the following. So we will be having representative of the Central Bank of Turkey, Ahmet Buğday. We will be having Ekaterine Galdava, Deputy Governor from the National Bank of Georgia. We will be having Director of Research of the Center for International Governance Innovation from Canada, Odun Olowookere. And Sanzhar Zhamalov, Country Manager for Kazakhstan and Central Asia at Mastercard. Please take your seats and enjoy the panel.
Well, greetings everyone. It's a real honor to actually participate in such activity and in this particular panel session. Today we're going to talk about digital assets reshaping global payments. And before we start, I just want to clarify on how exactly this panel session is going to be. There should be 3 rounds, and we're going to ask and answer some questions relating how exactly digital assets are affecting our world and our sphere of finances. And if we'll have enough time, we also will be able to actually have some questions from the audience. Well, if not, well, that would be a pity, but still. I hope that would be a great discussion. And we would start from something that I would call a state of the art. So what actually digital assets are and what they are doing in payments today. I guess you need some kind of introduction. Maybe it's obvious, but still. Well, actually, everyone can see that over the 5 years, maybe a decade, digital assets actually stopped being an experiment, but become a real, meaningful implementation of digital technologies that can actually significantly change the world. And in my opinion, they are actually changing the world right now. Each of the panelists is working with payment infrastructure that either uses digital assets or is being reshaped by them right now. And we see that it's not only pilots, but it's also some real implementation, real use cases that really changes how things are working in finances. So my questions will be, in this first round, will be about digital assets doing something in payments today that was not possible or not feasible like 5 or 10 years ago. And I guess we'll start from our guest from Georgia, Ms. Galdava. Georgia actually sits in crossroads between Europe and Asia and has actively invested in payment modernization. And I might even say that Georgia is quite similar to Kazakhstan in this particular regard. In your opinion, how can countries like ours, countries that are not global reserve currency issuers, leverage digital assets and modern payment infrastructure to become regional hubs for cross-border settlement?
Thank you so much. First of all, I'm really very insightful because I can see this kind of excitement development of the country, of the Kazakhstan, and also see this kind of very comfortable and very clean city, first of all. Also to see this kind of developments, which are really, really very impressive. So, small maybe talks about myself. I'm just heading the payment department, but I'm just heading the traditional one, payment department, which exists in Georgia for many, many years. So I'm also a central banker. I spent a lot of years at the central bank, so whatever I'm just listening from this side, from the side of the audience, sometimes, let's say, it's not that kind of comfortable for me, because we're always taking care of the risk. We're always taking care of the safeguard of the sustainability, because it's done for us, it's granted for us by the Constitution. Maybe a decade ago, we were just only talking about the cash, how important this was cash and what we have to do with the cash. And now the reshaping of the world, the reshaping of the society is moving so fastly that even I have to say about a small example. I have a very good employee with whom I'm just having some kind of talks, but kind of rarely. For example, 3 months ago, we were talking about the new development in the digital asset category, and all his wording were so not familiar for me. And on every he's coming and entering my room, I'm always asking him, what is the new one? And he, again, is just shaping and underlining that there are so many new and interesting things. So what the Georgia had to do in this regard? First of all, we just mostly are thinking about our traditional infrastructure, about modernizing our payment system. So for that, we started to do some kind of very influential and very significant project, like upgrading of the RTGS system. It's very well known to every one of you, because even though we are just dealing with the crypto, everyone knows what is the real-time gross settlement system. So we did it perfectly. The first one was done in 2001, and the second one in 2016, and lately we just did the upgrade of the system. One just finished a month ago. The new project, which also involved our development in this payment system, goes to IPS, this fast payment system, which will be done by the end of the year. And of course, we will think about this kind of cashless involvement of the merchant, of the physical entity into the system, and of course about the source of money that will increase the banking system assets as well. We're also just thinking about the national card processing system, which of course we are so thankful to the Mastercard and Visa, because this kind of card system did a lot for our country. They developed our banks technologically, and we have maybe one of the most, developed card scheme in our country. And also the second is the openness from the side of our system and of our countries. Of course, it will be very easy to speak about our mutual understanding, about our memorandum, but we have to think technologically, how we have to switch, how we have to connect our system. And first of all, legislation is very, very thinkable from our side. And the third one may be the trust, because geographically we are in very nice place, especially Kazakhstan and also Georgia. Besides the geopolitical circumstances, because geopolitical wars, we still have very good situation, and we hope that we will have calm situation, stability, which also underlines the financial prosperity for the country. And we will think that using this kind of, turbulence from our side will be very good. So, of course, we will think about our future connection with the Kazakhstan, and we'll try to connect all this kind of already developed and new digital system in the future.
The part about legislation and all that allows, because we actually have the similar situation here in Kazakhstan. What we have actually learned is that create a CBDC or any other technical platform is quite easy actually, but create laws for that, well, that's a completely different story. Well, again, thank you for your answer. I would like to ask our guest from Turkey, Mr. Buğday. Turkey has built some of the most advanced national payment infrastructure in the world. So we can talk about instant payments. Yeah, I also familiar with your CBDC research. We also know that there are several significant blockchain-related programs. Well, where in that infrastructure are digital assets, stablecoins, tokenized instruments, or CBDC? Where is it actually doing real work? And what actually surprised you about adoption that looked like your assumptions were not met, or maybe you were wrong in your predictions?
Okay, thanks for asking. I would like to start by separating two things: digital assets role in our official payment system rail, and market demands for digital assets. In our official payment systems. One of them is FAST, our instant payment system. It does daily work. We launched it at 2021 and it has a great adoption since then. It settles 15 million payments in a daily average, and it settles 28 million payments in a peak day. And it took less than a second to settle a message. This is one of our official payment rails, but in this system, digital assets is not playing a role, unfortunately, for now. Another complementary payment system rail we are working on, as you mentioned, CBDC. By the start of this year, we conducted a pilot project. We tested DVP scenarios in that pilot. So we can say digital assets have a potential in CBDC systems. But again, for now, it's not live, so we can't say a real work in that. Digital assets are doing real work in the market demand outside our official payment rails. Especially stablecoins has a big demand from our citizens. As you may know, because of the high inflation and volatile local currency, let's say in the past, we are fixing that. People demand stablecoin to protect their money's value. Stablecoins are used to access for dollars easier and cheaper. And they are used for crypto settlements, but that's not the same as being part of the national payment system. What surprised me is that adoption didn't follow the design language. Designers talk about blockchain, programmability, and architecture, but users talk about speed, cost, trust, and control. They ask simple questions. Does it work now? How can I use this? And who helps me if something goes wrong? So the lesson is simple. Digital assets are adopted when they solve a real problem, like in Turkey. The design can be advanced, but adoption is always practical. Let's stop here. Thank you.
Thank you. Yeah, really familiar with the situation that you explained, that sometimes even the language doesn't exist for problems that we're trying to solve. Or like we had a lot of these discussions with a lot of our government officials that we are trying to propose some of our solutions, and the answer is like, no, it's not possible. No, you cannot. Like we had a lot of the discussions regarding inflation. It's a real problem for, I guess, the majority of financial regulators around the globe. And there is always like an answer, no, you cannot fight inflation. There is only should be only monetary policy can solve that. However, I think the opinion is actually changing, and I'm really glad that opinion is changing not only in our country but also all over the globe, and Turkey is an example of that changing the perspective. Thank you. My next question is going to Mr. Zhamalov. I would like to actually ask you about traditional role of Mastercard, because Mastercard is actually an intersection of traditional card rails and emerging digital assets. And we all know that you have partnership with different type of decentralized finances representatives, such as crypto exchanges, stablecoin companies, and CBDC pilot globally. Actually, we also participated in one of these. What is Mastercard's operational view on how the payment landscape is shifting, how it's changing right now?
Yes, first of all, thank you for your questions. Hello, everybody, dear friends, partners, and obviously the colleagues and guests of our country. Welcome. We're always happy to see you here. Yes, as a also background, wanted to mention, like before, of course, Mastercard and my career also used to be employee of National Bank of Kazakhstan as well some time ago, so it's always exciting to be back, but now as a guest already myself. And coming back to your question, actually indeed we see huge development of this stream globally and especially also in Kazakhstan. And when you realize that, I'm always telling this story, you know, that recently I've been in a wedding of my cousin, and like one of my aunts, who's like almost like 60 years old, coming to me and asking, do you like, oh, Sanzhar, what do you think about Bitcoins? How should I buy it? And like, you're saying, okay, if people all the age already in Kazakhstan are really interested in this development, interested in this assets, if you understand that this industry is developing very fast. And we can see that as well, that even 5 years ago, we've been just discussing, well, what is blockchain, what we should do with that. But nowadays, you're seeing on this old presentation that infrastructure developed so much. It's unbelievable. It's evolving in huge temp. Even speaking about the Kazakhstan itself, that we as Mastercard in Kazakhstan have already several crypto programs. We had a crypto card with BCC Bank that was approved also by Central Bank of Kazakhstan and with their help. We have a card with Binance in AFC. We in a deep discussion and some programs with Binance. We have already program with them, wallet to card and card to wallet. And I can bring you lots of examples of what exactly we as Mastercard do in Kazakhstan, thanks to very good regulation from Central Bank of Kazakhstan and AFC, Astana Financial Center, that allowing us to work and actually expand this new technology in the country. But at the same time, we're working closely with, for example, Central Bank, that we launched together first CBDC for Kazakhstan tenge. Last year, we launched first stablecoin with Solana, Central Bank, Kazakhstan and Eurasian Bank, or again, huge project. So you see that we are kind of trying to be on the edge of these technologies here. That's an important point. But coming back to your question, where it's heading. In our view, the future lies, you know, somewhere, not it will be with digital currency, etc. I think the future lies somewhere in between. So we need to somehow find the way to connect digital assets with real classical financial instruments that we're already having, because future is definitely there. It's not that one technology evolves and it will kill the rest of the thing. It will be definitely somewhere merger of this thing. But the main, obviously, question right now that I'm hearing actually almost from all speakers today, that how we find trust, interoperability, scalability, and governance in all of this. And I think that's the main question that we need to answer as all market participants. And I think that's the crucial thing. But we are definitely see that future lies there in collaboration between all members. Thank you.
It's actually nice to hear that approach of collaboration is something that Mastercard, as one of the largest companies, international payments providers, takes as a principle, as a main principle. I also want to mention that I participated in our joint experiment with CBDC card. It was like 3 years ago. And actually that was maybe the first example when we could see actually how can this middle between innovation and traditional payment coexist. And I guess you're right in this particular regard. We would not, despite the presence of this term of disruptive innovation, I don't think that digital assets are like killing innovation. Of course, it disrupts market, it changes the landscape, but it doesn't mean that all of it should be altered without any kind of older versions of payments being existed. So my last question on this particular house goes to Mr. Olowookere. I'm actually really glad to have someone related to academic research. And I know that your research at CIGI examines how digital assets are shaping monetary sovereignty and global financial governance. It's something I guess we all can agree. That's something that is now kind of difficult to predict, but still it's needed to be done. When you look at the empirical evidence on cross-border payments corridor where digital assets have been deployed, like if you're talking about remittances, trade settlement, liquidity management, what does the data actually show about cost, speed, and accessibility compared to traditional corresponding banking system? Because we have a lot of these discussions, and I actually, one of the participants in these discussions, I truly believe that digital assets can significantly simplify cross-border payments and make it cheaper. But is it actually so?
Question. First, I want to thank the hosts of this event, and I want to thank the organizers, P2P. It's been a great event so far. The hosts, the city has been pleasant. I'm looking forward to future visits. Regards the empirical data, I mean, the data is quite clear, but it should be read with carefully, because variables like costs and speed are not fixed, right? So what the data says about speed, I'll start with speed. What the data says about speed is clear, right? Stablecoin settlements are quite fast. They settle atomically, quote and unquote. But they're subject to restrictions and restraints, like they could be gas prices as a result of convergence and high traffic. And the global average cost, for example, of sending a $200 bill, $200 transaction from A to B, would probably be around 6%, which is a lot higher than the G20 requirements of less than 3%, I believe. So that's quite concerning. But stablecoin transactions settle quite quicker than that. But as I said earlier, it's subject to gas costs and traffic. Speed is a bit more complicated. Correspondent banking, 35% of retail payments and 55% of wholesale payments reach beneficiaries within an hour. But digital asset rails, they settle in minutes. But again, it's network dependent, and blockchain confirmation times vary, again, dependent on congestion levels. So that's complicated, as I said. Now, volume is a lot more complicated than speed. And yeah, because I've noticed that volume tends to converge on certain jurisdictions that have unique requirements. So in certain unbanked jurisdictions in Africa and Global South, as they are popularly known, we find a lot of convergence on these alternate payment networks. But we find the reverse in other jurisdictions. So, and we also see a lot of use case with institutional settlement. So it's been described as the killer app for institutional payments and settlements. And this has probably caused a lot of threats to the central banks and regulators. So that's quite interesting so far. So yes, that's about it.
It's actually really nice to hear that there is at least some kind of advance. I tend to think that it's still better than existing technology, than well, older methods of payment. But yeah, I just want to have some clarifying question. You mentioned that if you're talking about cost, it's 6%. Is it for private blockchain networks, like an average, or are you talking about stable coins? Yeah, could you please clarify?
The 6% is for correspondent banking, right? 6% of $200. Yeah, but for stablecoin payments and most digital assets, it's a lot less. But that's subject to gas costs that could increase due to traffic and convergence.
Well, thank you for clarification. And I guess we now will move to our second round. And we would talk about the topic that actually was predicted by Mr. Zhamalov. We're talking about infrastructure. Well, it's actually a really important topic for me personally, because I work for the Digital Tenge project. It's actually our Kazakhstani CBDC project. As you may know, it is actually designed to operate as a programmable money. We use a lot of Digital Tenge's programmability for public procurement. And actually, one of the hardest problems that we faced with is actually interoperability, because it's kind of difficult to connect an quite novel system as CBDC to private networks, to state databases, corresponding banking rails. And it actually becomes even more difficult if you're talking about cross-border payments. That's something that we are actually working on. And what we're actually going to talk about is how we can address existing gaps and what is actually the situation for now. And I guess my first question for this particular round goes to the person who actually predicted this topic. Mr. Zhamalov, Mastercard processes billions of transactions annually, and I guess maybe even daily, across its network. When you look at the corridors and use cases where digital asset rails are gaining share versus where Mastercard's network still wins on cost, speed, or reliability, what does this competitive map look like today? What are strengths of Mastercard's in this particular regard in terms of infrastructure?
Yes, thank you. I think that's a very good question in the sense that indeed everybody believes that with development of these new rails, of new assets, our business will be obviously at risk somehow. But to be fair, we see it slightly different. So to be clear, like up to date, our main competitor is cash. It remains, that's the main thing that we are trying to kind of fight. And of course, because clear path for payment is what countries need, people need, what is good for our business as well. So we see CBDC and tokenized transactions in general as one of the streams how to deliver value. That's important thing is to deliver value, and that's what all businesses are looking for, how to deliver value cross-border, how to deliver this value from business to business. And we actually see ourselves as in a good place in this sense, actually, the one that can connect several players. Even you, as you just mentioned right now, that doing cross-border CBDC is very complicated. And when I think about Mastercard, because we work in 210 countries globally, we connect more than, I don't know, like 25,000 banks globally. So we kind of in this connection already. So we are in a good spot to start connecting all the market players between each other, so to help, first of all. And second of all, as again we've been mentioning before, everybody needs trust and governance for this. And we are also in a good spot to provide that. That's why we kind of developing our own initiatives in this sense of, that's why we, for example, created a multi-token network that actually designed to connect regulated institutions with their traditional banking systems with B2B like tokenized payments. So the idea obviously is to provide real-time settlement, and that's the whole idea. But on top of that, they know that because it's a Mastercard network, it's very trusted, governance is very fine, there is a compliance checks and everything. So this system already works. Even like one of recent examples, for example, we've done settlement between Standard Chartered and JP Morgan with tokenized treasury assets, actually, that went through blockchain and traditional infrastructure, and the payment obviously was done simultaneously. So it's actually the point that I was taking before, that we're trying to combine both worlds, because both worlds will be still existing, and we can be on the edge of all of these technologies. And we're seeing that this MTN network is already becoming quite popular for SME. It's becoming quite popular for real estate transactions. And we are there actually to expand this technology going forward. So we indeed see that this technology going forward will be developing. Even nowadays, lots of banks in our region starting settlement with us with stable coins. Which is good for us, which is good for them, for the clients as well. So I think that's the path we will be taking. And speaking also about our project with stablecoin, I understand, like I was listening to Nurhat and totally understanding him from Nurhat from Binance, who said like, it's very hard to find examples how to use stablecoins in Kazakhstan, because indeed everything flying simultaneously with help of central bank, government, everything. But at the same time, when you're thinking about the cross-border, that's where we can work. So we are right now trying to facilitate the dialogue with bank with Dubai and other countries, so who can work on this stablecoin project cross-border. And once we finally, of course, understand the first road, we will be discussing with the central bank again how it should work, etc. But at least to find this way for cross-border transaction. I think that's the common goal that we in general have. Thank you.
Actually, I must say that I was always a little bit skeptical about like this idea of networks or multi-token networks, as you call it. But again, if there is an organization that can actually create one, I guess it should be Mastercard or any other player with this particular experience and infrastructure to build one. Again, thank you for your answer. My second question goes to Mr. Olowookere. There is a narrative around digital assets that they actually can solve, well, if not all, but at least the majority of corresponding banking problems. But again, the question is, in evidence, do we actually have one? From your perspective as a researcher, where have you seen digital asset payment corridors generally displace corresponding banking? Or maybe there is none. Maybe there is still a mixed evidence on this particular regard. Where has de-risking by corresponding banks simply shifted into de-risking of digital asset on ramps? And actually it's solving nothing and potentially making things worse.
That's a great question. Two aspects. There's a gray area in between the displacement and the retainment of correspondent banking. So there are places I believe there's likely to be a displacement, and then there are other places that I believe that the displacement has already begun to occur. So where I think there's likely to be a displacement is in the area of institutional settlement, wholesale settlement, and that's because it's the advantage of digital assets is that quick settlement. They settle very, very quickly, and the institutions are likely to take more advantage of this than the peer-to-peer transactions. The other angle or other area where the displacement is occurring is in jurisdictions that are highly inflation sensitive. So in these jurisdictions, you probably want an advantage of access to other markets where goods are a lot cheaper. And inflation, you're stuck with your system, you're stuck with your money. But with these digital assets that are borderless, some claim it's a good or it's a bad thing for these instruments to be able to pierce through borders unchecked. But others would like to derive some benefits from this. So in areas where there's a lot of inflationary issues, you find people that gravitate towards digital assets as a form of payment or settlement. So yes.
I'm not a researcher, but I can definitely agree on wholesale payments. Because as a representative of central bank, I see a great potential of digital assets actually simplifying and making wholesale payments more efficient than that. Again, thank you for your answer. You restored my faith in digital assets. My next question goes to Ms. Galdava. Actually, Georgia sits on corridor between the European Union, Turkey, Central Asia, and Caucasus. As I mentioned before, we're a little bit similar in this particular regard. Where are the flows, remittance flows, breaking down or being diverted to informal channels because the formal digital infrastructure is not good enough? And what would it take to fix that? What is your opinion on this particular thing?
Thank you for this kind of very interesting question. I would like to underline, it might be not that kind of more, slow. Because of course it's formalized, it has been done, but sometimes for remittances, for the people who are outside of Georgia, it needs 2, 3, 1 week, 3 days for just kind of having this kind of placement of remittances or whatever we have. Georgia is, we just gained our independence, sovereignty through the monetary policy views, through many macro topics, which is very favorable in this case. We have double-digit growth for the past years. We have slow, moderate inflation. And we are very much thinking about our environment because we are just having the border with Russia and all this kind of geopolitical sort of things. Sometimes it's not nicely just involving for our country. So we have to think about this issue first of all. And of course, we very well understand that we have a very well built London-based, based on the London Stock Exchange, 2 commercial banks which dominate in the country. Of course, they're also transporting and just exporting their services to the Central Asia countries, to Uzbekistan, to East Europe countries, to Armenia. They bought one of the big banks in Armenia. So they're just postponing, they're just positioning themselves like a very good financial services company. But from the other side, of course, we have this kind of WASPs, we have this kind of digital crypto assets that exist. So currently, on maybe let's start from 2021, when the National Bank of Georgia decided to formalize this kind of regulations and made some kind of changes in the national law on the activities of the National Bank of Georgia. So this sentence about the virtual assets activity was added to the legislation. But currently, recently, I mean maybe by the end of 2025, NBG, National Bank of Georgia, decided to have strong, much prudent supervision of the WASPs. What does it mean? So financial reporting, which is really very necessary, at least to know what are the ideas, what is the amount, what are the flows inside, outside of the banking system in these kind of cases, and also have some kind of supervisory requirement, like to have the statutory fund, maybe 100,000 US dollars, something. Everyone strictly was this kind of amount, but also to think how to build and also what to think, what to do with CBDC and what to do with the stablecoin. Because digital assets already exist in Georgia. I mean, not digital assets, crypto assets, crypto exists in Georgia. So this kind of approach and very well-known IMF white paper about the same risk, the same regulation, and from the side of the central banks, it's much easier to think and much easier to talk about the strict regulation, but this is kind of mixture because today and yesterday we heard many controversial sort of things about the harmonization of legislation, about the AML and further know your client facilities, because we need still the governance, the procedures of AML procedures, so this is also very important for us. Another aspect which is also important for the new population, because we are responsible not only for the inflationary matters, not only price stability and financial safeguards, but also for the consumer protection. So we have to, how to say, educate maybe people. What does it mean? Because even sometimes for me, like being in the commercial, in the banking sector for more than 20 years, so many things are new and so many things are not understandable. So this financial literacy, which is also part of the activities of the National Bank, is very important. So we are also trying to find this kind of understanding and delivering to the public, delivering it to the through mass media to the population, how it is important. And also the third one, maybe the fraud problematic issues, which is increasing with the modernized capability of the world, of the people, because it's today I heard very interesting chain about, it's not only the banking system, it's all kind of telecommunication, all sorts of institutions who are in the same chain, and by then when you are just having the cash and you need the banking account, of course it's the last point goes to the bank. So very important and very critical sort of views that now currently are discussed among the central bankers, also at the National Bank of Georgia. So we hope we will find a very good solution, because when even we are just talking about the supervision, about this financial kind of reporting from the side of the WASPs, this is kind of global sort of financial product. So how to make this kind of harmonization between the different legislations, between the different blockchain DLT facilities, is not that easy. So this is the main sort of understanding for the Central Bank of Georgia.
Well, thank you. Thank you. Yeah, actually, I could not agree more on your words that actual central banks need to educate people, because I tend to think that due to this disruptive innovation caused by digital assets, there is one more role on the central bank. It's actually an enlightenment, because I actually remember that I had a lot of these conversations, like educating conversations with a lot of our colleagues, with a lot of our representatives of our commercial banks, because like 5 years ago the situation was, I guess, much worse than it is now. I mean, globally, people didn't know anything about Bitcoin, people didn't know about blockchain, and I remember that I even created presentations with the slides that explains that what is blockchain, what is the cryptography, how exactly it works. So yeah, I think that's actually one maybe most curious aspects of this digital assets being popularized all over the globe. And last question of this round goes to Mr. Buğday. Turkey's fast system that you mentioned before processes millions of instant payments daily. But cross-border instant payment remains a fundamentally harder and different problem. What is the technical and governance bottleneck that prevents domestic instant payment infrastructure from extending cleanly into cross-border corridors? Because it seems kind of logical if we have an existing internal system, why should not we scale it up? And should it be a CBDC or any kind of digital asset solution that actually solves it instead of just scaling it up?
Yeah, thanks for asking. Creating domestic instant payments is quite easy when we compare to cross-border type, because you have one legal framework, you have one central bank settlement environment, you have one domestic rule book that makes instant payments possible at scale. But when you come to cross-border payment system or interlinking domestic instant payments with the other countries' instant payment systems, it's a very different problem. Actually, we developed our fast less than a year, but we are working on an interlinking project. Actually, setting a meeting takes weeks. Yeah, it's a different problem. But the bigger bottleneck is governance. In a domestic system, everybody knows the rules. They know when a payment is final. They know who carries fraud liability. They know who can stop a payment. They know which regulator has the final word. But across the borders, none of these is automatic. You have different legal systems, two different legal systems, sometimes more. You have different currencies, you have FX risks, you have different AML rules. As everybody mentioned, you have different regulation. You have to harmonize the regulation before interlink instant payment systems with other countries. So the real question is, can we agree on a common rule book when something goes wrong? Can CBDC help? Yes, but only some parts. CBDC can solve a settlement problem, maybe FX problem, trust problem. Non-technical trust problem still remains. But it does not create FX liquidity. It does not harmonize sanction rules, and it does not automatically decide who has legal authority over a transaction. Digital assets, especially stable coins, maybe they can solve, but they move the problem to another level. When you use stable coin, how can you trust the issuer? Trust issue pops out, and reserve assets, redemption risk, compliance, and monetary sovereignty especially pops out. So my view is digital assets can solve the settlement layer, but the full solution needs governance. It needs a shared rule book, it needs a shared common standards, clear legal finality, and clear responsibility. Technology can connect the systems, but governance make the connection usable. Thanks.
Thank you for your answer. Actually, I always remember one of the maybe first recollection me as a central bank worker is one of my colleagues telling the joke about two central bankers being in prison for 25 years. And when they actually became free, they were like standing in front of their prison, talking about governance for half an hour, and only after that they decided, well, now we can go. So your governance is always important. We can spend a lot about talking about it. But yeah, we actually would like to move to another, maybe our final round. And it's actually one of the most important and I guess the most interesting one, because there is always this ongoing debate on how exactly central banks or financial organizations should address the issue of two quite different systems. One of them is CBDC, it's public financial system, and another one is private blockchain, or maybe not blockchain, networks. I believe that these two type of networks will coexist. Maybe not so peacefully in the beginning, but still there should be some kind of trade-off between two of them. But the question is like how they should be designed to work together, and actually who should govern, again, the governance, who should govern the interface between them. And so, again, my question in this final round goes to, again, Mr. Buğday, for you. As again mentioned before, Turkey has deep technical expertise in RTGS, instant payments, and blockchain-based infrastructure. And I have a question in when you are trying to design a system that actually should be a bridge central bank digital currency or private stablecoin, or I don't know, any kind of traditional and innovative financial instrument. What are your non-negotiable technical requirements? And is there any cases where actually government requirements create constraints that cannot be solved by technical means?
Okay, thanks for asking. Firstly, I would like to define very briefly these types of digital money, let's say. A CBDC is central bank money, as you know. It has central bank liability. Deposit tokens or tokenized deposits is a commercial bank money, and stable coins are private money, private sector's money. These are really different type of money because of the liabilities. So when we design a bridge, the bridge must respect this difference. The first non-negotiable requirement is, in my opinion, settlement finality. When the payment is done, it must be really done. There should be no uncertainty. The second requirement is atomicity. If there are two legs of a payment with different payment system, let's say one CBDC, another digital assets chain, they both must be done or not done at the same time, atomicity. The third requirement is interoperability. System needs standards, common data standards, APIs, wallet rules, ledger adapters, and a clear way to handle exceptions. The fourth requirement is resilience. This includes cybersecurity. In this panel, in this event, AI hasn't been told much, but with the rise of AI, cybersecurity becomes really very important. So the system must be resilient. In payments, downtime is not only a technical issue, it's a trust issue. It's the most important thing in a payment system. Now, where does governance limit technology, you asked? Technology can make two ledgers to talk to each other. It cannot decide where a private token should be accepted at par with central bank money. Technology can freeze a wallet. It cannot decide who has the legal authority to freeze it. Technology can share data. It cannot override data protection rule. So architecture can reduce risk, but governance defines acceptable risks. Payments or money should be simple, safe, and overlay services or innovation can be around of its controlled layers. In our CBDC project, we don't prefer to say programmable money. Instead, we prefer to say programmable payments, because money must be simple and safe. It can turn to everything. You can buy anything you want with money, but you can program your payments. So the best bridge is not the most complex bridge. It's the bridge that is legally clear, operationally resilient, and trusted by all parties. Yeah, thanks.
We're actually reminding about this dark side of using AI because I truly believe that this is a problem because I see a lot of sites that can actually, websites that can create artificial photos of your passport, and I know that a lot of crypto exchanges can use these photos in order to verify your transactions. And I am actually deeply concerned with that because I see this is a topic that actually not a lot of people talk about, but for now the problem maybe is not so significant, not so serious. But I really think that this is maybe a topic that we as a representative of central banks, we as a representative of financial organizations should pay more attention to. Thank you for your answer. My next question goes to Mr. Olowookere. The governance questions around public-private payment network convergence is fundamentally questions about who controls the rules of systems. Again, we are talking about rule books. In the jurisdictions you study, where is the government's questions being resolved well? And where is maybe absence of clear governance framework? Can you please give us some examples?
That's a great question. To answer this question, I would like to tell a story of two jurisdictions, right? One jurisdiction favors private networks and put an absolute bar on CBDCs. And another jurisdiction favors, well, not a jurisdiction, sort of a regional bloc, favors CBDCs and is setting up frameworks that are resistant, quote unquote, to foreign stablecoins. I find that the jurisdictions that are doing better are jurisdictions that have public infrastructure and private innovation running on that public infrastructure. And are not jurisdictions that place an absolute bar on certain financial instruments and or favor certain public or private digital assets. It's very, very tricky. It's actually almost like a tug of war right now because certain jurisdictions that okay, maybe I should stop using certain jurisdictions and be more frank. The United States has put an absolute ban on CBDCs, and it's quite interesting and hilarious that you find that absolute ban in legislations that have nothing to do with payments. So, for example, you find an absolute ban on CBDCs appearing in real estate legislation, not for tokenization of real-world assets, but a plain and simple real estate legislation, which is ironic and confusing. And I think in that jurisdiction, public payment networks have gotten a bad rap, and I guess it's as a result of I guess heavy lobbying by the private payment networks. So I do not know where things are heading. I do not know if there's going to be a convergence. I hate to go against what has been said earlier. So the previous panel, it was said that it's best to move fast, and there's certainly there are advantages to first movers. But I think it's sometimes it's best to act when the dust has settled. I believe it would be best to have a mix of private and public payment networks, but you would have an economic problem called Gresham's law, where bad money chases away good money because of the differences in the intrinsic value of the bad money and good money. And I haven't seen a lot of research done on the effect of Gresham's law when you have multiple currencies or multiple payments means existing at the same simultaneously. So yes, I do not have a clear answer to that, but I believe the best approach would be public infrastructure and private innovation running on it, and allow competition and no absolute bar to certain private or public payment instruments. That's a bit too much, in my opinion.
I actually totally agree on with your words regarding competition. Yeah, maybe I'm a little bit more skeptical on private networks because this is a nature of monetary policy and the nature of money itself. It actually may be an issue in some jurisdictions, but still, thank you for your information. Thank you for your thoughts. My next question goes to Ms. Galdava, and it's actually a little bit a paraphrase, maybe, but I'm interested in your opinion as a representative of a central bank. One of the key debates today, again, is whether the future of digital payments will be built around public payment rails, such as CBDC or instant payment systems, or around private blockchain networks and stablecoins. How do you, as a representative of the central bank, see the balance? Because we talk a lot about there should be balance, they should coexist, but how exactly this balance and this coexistence should be actually done, in your opinion?
This is a very, very difficult question because there are so many debates about this issue. Yes, they have to coexist. This is my personal opinion, but I'm an ordinary member of the board of the National Bank of Georgia, and the board consists out of 9 people, so we are just in the deep discussion to where to go and what to do. We had the project with CBDC, with Ripple, which was done 3 years ago, but we didn't have some kind of continuation of this project. So what I can tell and what is my personal view. Of course, you already mentioned the monetary sovereignty. To deal with CBDC and having the digital currency of the central bank, of course, this means that emission is again at your hands, at the hands of the constitutional right of the central bank. So it's much more easy. But when you are just talking about the commercial banks and about other entities of the financial sector, whatever we're just hearing from the debates all over the world, we're just hearing that in 10 years or maybe even less, there will be no need for commercial banks. There will be only central bank, and there will be the account of the population and the entities. So, of course, we have to think about the intermediates. We have to think about the deposits, that liability side of the commercial banks and the financial sector, which is governed by us, by our supervision, but governed with the perfect management of the commercial banks. The second pillar and the second story of this, how to say, debates are these kind of stable coins and these private sort of organizations that are doing this, dealing with these digital assets. That means that all your sovereignty, you are just moving to the private sector. So the printing of the money, which is your constitutional right, goes somewhere else. You are responsible for the reserves also, but you have to have very good and very strict framework of checking whether these reserves are on the place of this stable company, issued company or not. So there are so many technical details that should be coincided and should be thinkable that I think we would spend the whole 2 hours about that. Because when you have your monetary policy at your hands, when you have this kind of monetary policy instrument on which you work for so many years, and now currently your broad money is governed by cryptocurrencies, which are also the assets, digital ones, so it's not that easy to talk about this issue. I think from the point of view of researchers, point of view of many academicians, this will be the issue that will be discussed in many, many years. But the hybrid system of the Kazakhstan, this is very, very, how to say, welcoming by our country and very, very interesting for us. I hope that in coming years, the world will come to some kind of point which is the better. But from the point, my personal point, I think this kind of hybrid system is the best case on the current stage. Thank you.
I'm glad that we are not alone in actually not having a clear answer for that particular question, because we do not have an answer for that. We are still looking for it. Again, thank you for your thoughts, for sharing your knowledge. And last questions goes to Mr. Zhamalov. Mastercard has positioned itself, and I guess it goes for maybe several years now, as a bridge between digital asset networks and traditional financial infrastructure. We can actually mention the example of CBDC cards issued in Kazakhstan with our digital tenge project. You're actually connecting crypto wallets to merchant acceptance. You're also enabling CBDC interoperability with card rails, again, as in CBDC card scenario. Is it a traditional role while new infrastructure matures and you will shift to something else in future? or you see Mastercard as a permanent layer in this digital asset payment scheme?
Okay, thank you. Again, brilliant question. If only I knew the future, yeah. As colleague already mentioned, like maybe in 10 years' time there won't be any commercial banks. That would be interesting future. But in general, of course, we're seeing that the world becoming more and more complicated in the sense that right now, of course, we're seeing that commercial banks still have their classical deposits still in place. At the same time, some other providers creating deposits for crypto assets. How to regulate all of that. At the same time, someone should, of course, govern that. Someone, of course, should be a dispute resolution center for all of this. And on top of that, there is, of course, a fraud. And all of this system is extremely complicated. But at the same time, we're thinking from the point of view of a customer. Eventually, customer wants best from both worlds, I would say. Yes, first of all, of course, they want this very efficient system that digital assets can bring, that all CBDC can bring, etc. Very easy, operatable, but at the same time, still nowadays, and I think people maybe always will want proper governments, good brand behind that. They will definitely need trusted partners who can manage that, especially when we're speaking about cross-border transactions. That's why for example, when I heard about the fraud, for this reason, for example, we created exactly crypto credential. That was one of the points, yeah, because we provide IML and compliance check in crypto credential. So unlike other transactions, there you can go and send or receive crypto assets with simple ILs, with very simple term in the sense of, for example, like right now, when anyone who used crypto exchanges, you have this 64-digit numbers, etc. While, of course, at the same time, in a crypto credential, you just can use something very simpler, yeah, just phone number, etc. But importantly, even if you don't know who is behind it, you know that the transaction is IML compliant, is general compliant with all the rules. And that's kind of the bridge we're trying to build long term. And this bridge, I think, will stay there for some time. Because even I'm just responsible, of course, in Mastercard for Central Asia. I'm seeing that every country trying to find their own way. Every board of central banks have their own discussion, their view. Someone agree with something, some not. So that's create the whole system. At the same time, all the banks, all exchanges in this country have their own views as well. That's why there is so many different business models that we're seeing, even in Kazakhstan, how we had a project with Eurasian Saving Bank, with BCC Bank, etc. Everybody work on different model. And we are right now here to bring all of this best expertise from the 200 countries that we are operating with to find the best model. And of course, we believe that once finding this best model, we will stay as a bridge that will help to operate this model going forward. Thank you.
Thank you. Actually, it's really nice to hear that you have like a full-fledged plan or implementation scheme. Well, thank you again. Unfortunately, we're a little bit out of schedule, so there will be no questions from the audience, but I guess you all enjoyed this panel sessions. Actually, I enjoyed. Thank you for your participation. Thank you for your attention. And I hope we can actually consider this panel session be useful and productive for all of us.
Thank you to our moderator for great moderation. Thank you.